Good morning, students. Yet another class on redemption of debenture. Now, on redemption of debenture, this is the last part where we will be doing the full sum. And this one is as per our 2021's pandemic year's syllabus is concerned, the last type of sums which we will be doing. So let's see. First of all, we have to understand the loss or discount that at the time of issue of debentures we have created, how to write them off. In the year when we have issued the debentures, in that year only, as per the provisions of the law, in that year only, it should be written off. The loss on debenture or discount on debenture should be written off in the period in which the loss has incurred, the discount has incurred. If mentioned in the sum in the other ways, then we have to follow the other ways. Otherwise, in the same year. It is also over the lifetime of the debenture, but that is not in the syllabus. Okay. Next, discount or loss on issue of debentures is written off from what? First of all, we prefer security premium reserve account. That is security premium reserve account debit to loss on issue of debentures. If security premium money is totally used, then we will switch over to capital reserve if the company has a balance of capital reserve. Then capital reserve account debit to loss on issue of debenture or discount on issue of debenture. Then we will use the general reserve and then statement of profit and loss. Even if statement of profit and loss has no balance, then also it will be written off from statement of profit and loss. In that case, statement of profit and loss will have a debit balance, will become a negative balance. In that way also, even if the negative balance, as we have seen in schedule 3, that negative statement of profit and loss will be also written in reserves and surplus, under reserves and surplus. That means statement of profit and loss can become a negative balance also because of loss on issue of debenture. To illustrate this, I'll give you an example. Suppose loss on issue of debenture is 1 lakh. Security premium reserve is 5,000. Capital reserve of the company has 5,000. General reserve 5,000. And statement of profit and loss also has 5,000 credit balance. So we will do first security premium reserve account debit 5,000 to loss on issue of debentures 5,000. Still 95,000 loss is still left to be written off. Then we will do capital reserve to loss on issue of debentures 5,000. Then again general reserve to loss on issue of debentures 5,000. 15,000 gone. Still 85,000 loss is there. And only 5,000 credit balance is there in the statement of profit and loss. Surplus is only 5,000. So we will be writing the next entry as statement of profit and loss to loss on issue of debentures 85,000. That means our statement of profit and loss will become a negative balance of 80,000. This is the order which we have to follow as given in our Companies Act. Let's do a sum. On 1st July 2016, Asset Limited, an unlisted construction company, that means they have to, remember the provision, unlisted company, they have to make DRR as well as DRI, issued 1,008% debentures of 100 each. They have to make DRR and DRI at the time of redemption, prior to redemption. They have issued 1,008% debentures of 100 each at a discount of 10%. That means 90 rupees per debenture they have issued at a premium of 6%. Redeemable at a premium of 6%. They are redeeming at 6% premium. Now, this premium is also calculated on the nominal value, students. That means the premium is 6 rupees per share, which has to be redeemed. The company made the requirements of the Companies Act 2013 regarding debenture redemption reserve on 31st March 2018. They have given the date of DRR, 31st March 2018. The informations which they are given, you can underline them. You can Underline them in the sum. 31st March, they are creating DRR. Then they are issuing the debentures on 1st July 2016. You may write them also or you may underline them. It's an unlisted company. It's an unlisted company. Then discount, the issue is on discount of 10%, and the redemption premium is 6%. Premium on redemption is 6%. The debenture was redeemed on due date. No, the company writes off its capital losses in the year in which they occur. The company writes off capital losses in the year in which they occur. As written over here, that are the same year when the losses are occurring, that year only the company is redeeming, that year only company is writing off the losses of the venture. You are required to pass journal entries in the books of the company for the issue and redemption. That means we have to pass the issue entry as well as redemption entry. So the issue entry is what? 1000 shares. I underline 1000 debentures, sorry, not shares, debentures of 100 each. This is our at a discount of 10%. That means 90 rupees per debenture. 90 rupees into 1000, that is giving us as 90,000. 90,000 is my issue. Company is getting bank account debit on 1/7/16. Company is issuing the debenture. So bank account debit to debenture application and allotment. Now, why debenture application and allotment, students? Debenture application and allotment because we have to write debenture application and allotment. Now, debenture application and allotment, when we are writing, we have to close this application and allotment event. When we are closing on 1/7/16 only, debenture application and allotment debit 2.8% debenture 1 lakh, but debenture application and allotment is only 90,000. So 10,000, the discount part we have to write, and we are going to redeem the debentures at 6% premium. So that we write 2 premium on redemption of debenture 6,000. 6,000 and that 10,000 discount. So 16,000 is the total discount and loss. We write only one word, loss. Loss and discount is synonymous over here. We can replace any one of them. Loss on issue of debentures 16,000. Then what? Surplus in statement of PL to loss on issue of debentures. This loss on issue of debentures on the same year, on 31st March 2016 only, we are writing it off. So we are writing from statement of PL. It will not be surplus. No requirement of writing surplus. You can just write statement of PL as there is no balance of premium or anything else is given. If premium would have been there, then security premium I would have taken first, as I already told you. Nothing is mentioned, so statement of PL. Statement of PL to loss on issue of debentures, 16,000. 16,000 will be written over here. That is to be written off. This loss on issue of debentures is written off 16,000. Then we have to create DRR. The date they have already mentioned. We need to create DRR because it's a unlisted company. The date they have mentioned is prior to your redemption date. That is 31st March they have. Surplus in statement of PL to debenture redemption reserve. You have to create 10%. I told you that when nothing is mentioned, you have to think that it is partly out of capital and partly out of profit. That is 10% we will take profit and 90% is the maximum amount of capital that we will be taking to redeem the debentures. So 10% of the profit is nothing but the nominal value was 1 lakh of the debentures. So 10% of that is 10,000. So 10,000 we have to create the DRR. So we are creating that only. Surplus in statement of PL to debenture redemption reserve. We have assumed that there is surplus 10,000 to 10,000. Surplus in statement of PL debit to debenture redemption reserve 10,000. So we have created DRR. Now the time of creating DRI. We know the date from 1st April to 30th April on the year in which we are redeeming the debentures. Remember, we are redeeming the debentures on 31st March 2020. That means prior to that, April month, on 1/4/19, we are creating debenture redemption investment. Investment, so debit to bank. How much? The limit is 15%. The minimum limit is the obligatory limit, the mandatory limit, which is 15%. A company can redeem debentures higher than that limit also. But that is the limit as given in our Companies Act. So we will be writing debenture redemption investment to bank 15,000. Next, we have the date of redemption. What we are doing in the date of redemption, we are selling of the investment. So when we are selling of the investment, the journal entry is bank account debit to debenture redemption investment 15,000, 15,000. And then again on the same date, March 31st, we are redeeming the debenture along with premium. So we will be writing debenture account debit, premium on redemption. Remember that premium was there, which we have kept it opened and we have kept it in the liability side. So there was no closing entry for this premium on redemption of debenture. Now we are closing it in the date of redemption, on the date of redemption. Debenture, premium on redemption of debenture to debenture holders. Remember student, always write debenture holders. Then again, on the same date, debenture holders to bank, 1,06,000. So debenture account debit, 1 lakh, premium on redemption 6,000 to debenture holder 1,06,000. Then debenture holders to bank 1,06,000. Now you remember our debenture redemption reserve is already used. That means its work is over. That money which was there, we will transfer it back to general reserve. That means we have to close that debenture redemption account and no more we have to keep it at debenture redemption account because that money will be used to be given as dividend or other things to the existing shareholders. The shareholders will not be deprived of the dividend of this rupees 10,000. That means 31st 3 2020 debenture redemption reserve account is to be closed. It will be transferred to general reserve. Debenture redemption reserve account debit to general reserve. One thing I'll say you students, in this sum, the question could have been to regarding interest. That means interest on debenture as well as interest on debenture redemption investment. We have to create interest, we have to close interest, and regarding interest also, regarding investment also, the interest we have to get interest and we have to close that interest. That also entry with along with TDS can happen, but we are not making it cumbersome. We have kept without interest. Nothing is mentioned in the sum, so we have not taken that. If nothing is mentioned, you will not take interest. Okay, this is your homework. Same type of sum, but instead of preparing the journal, instead of preparing only the journal, we have asked you to prepare debenture account, debenture redemption reserve account, and debenture redemption investment account. That also is required. That means this is a private limited, again an unlisted company where DRR and DRI both are required. Remember over here it is rupees 10 lakhs. So this is not numbers. And 100 rupees per debenture if nothing is mentioned in the sum. Remember it. That means number of debentures will become 10,000. So this is the sum students. Please do it and write to me in my, send it to me in my email, WhatsApp or through my comments. Now there's some theory questions which many students have asked. So I made it like this. What is the maximum limit of debenture which unlisted companies other than NBFCs and HFCs can redeem out of capital? Now it's an unlisted company and it is also not NBFC and HFC, no financial companies, no housing financial companies even. Maximum limit 90%. Minimum limit 0 because 100% out of profit they can redeem the debentures. But they have to keep at least 10%, 90% they can go, up to 90% they can go and redeem the debentures out of capital. This is the answer. List the companies which are exempted from creating a debenture redemption reserve. See students, these companies, all India financial institutions, banking companies, other financial institutions as given in section 272 of the Companies Act, LIC, IDFC, etc. Unlisted NBFCs and HFCs and all listed companies, they did not create any DRR. DRR is created only by the unlisted companies and that also which are not NBFCs and HFCs. And remember regarding this is for a DRR. DRR will be created by only unlisted companies. Next comes, what is the sources of finance for redemption of debentures? We know the sources of finance is capital, even by the issue of debentures. This capital can be generated by issue of shares or debentures or by taking some other loan, that is called capital. It can be 100% out of profit, and it can be partly out of profit and partly out of capital. Next question, mention the, can an unlisted company, non-NBFC and HFC, create DRR in case of losses? Yes. No, in case of losses, they cannot create. No unlisted company cannot create DRR in case of losses. In losses, surplus statement of PL we cannot write. We have only statement of PL. We cannot have negative balance in the statement of PL and we have to create a DRR. It's not possible. Okay, next. Then how they will be able to redeem the debentures in that case? They have to sell off their assets. That is also one option. They have to arrange by any other means. They have to sell off the assets, etc., to pay off the debentures to the liability holders. They have to pay, but they cannot create DRR in this case. Neither they will be able to invest anything DRI. How will an unlisted company redeem the debentures in case of losses? That is the answer already I have given. In case of losses, they have to sell off their assets. As we see, number 5, an unlisted company redeem the debenture in case of losses by selling off its assets. Next, can an unlisted company which will be redeeming the debentures from its profit and capital transfer the amount other than 10%? Yes, they can, but that will be higher than 10%, not lower than 10%. 10% is the mandatory. Next, can an unlisted company and a listed company invest an amount other than 15%? Is the same answer. They can invest whatever they want, but not less than 15% as given in the law, as given in the Act, Companies Act. That means they have to invest higher than the 15% amount. They can, but not lower than that. Next question. If the date of DRI has not been given in the question, which date should be considered? We know that from 1st April to 30th April on the year in which the redemption is to be done, that date should be considered. That means it should be on 1/4 to 34. It should be 1/4 to 34 students. 1/4 is written, that means 1/4. That means 1st April. You write rather 1st April. Between 1st April and 30th April. So 30th April, they can redeem the debentures. Next, how much will be the DRR? No, this is my homework. One more question is there. How is DRR disclosed in the balance sheet of the company? DRR is shown in the reserves and surplus. It's a special reserve, so it will be shown under reserves and surplus only. Are there any specific securities of DRI, or can the company purchase any asset and record it as DRI? Obviously, company have to buy the specific securities only. They just cannot invest in anything they want. There are specific securities, especially it is the bank loan, which are very secured, where interest income can be generated and is very liquid. That means it can easily be turned into cash. Those type of securities can be taken. It is mostly the bank loans. Bank loans I'm telling, bank fixed deposits, etc. they can keep, or government securities they can buy with DRI. That's all, students. This is my homework. How much will the DRR if redemption is done in lump sum out of profit 100%? How much will be the DRR? Which will company create DRR if redemption is done in lump sum out of capital? No, nothing required. I'm just giving you the answer. See, which companies are exempted to create DRR? You will write now. I will not say. How much will the DRR if redemption is done in partly out of profit and partly out of capital? That also you will be able to write. And the last, what if sum is silent regarding amount of DRR? We all know everything about all these things. So we have done the sums on this one, DRR, students. Next, this chapter is over. Still, if you need some help, I will be there to help you out. Please do my homework and send me through email me, WhatsApp me, or in my channel also. That Sanjiv.sirjii is the channel. There also you can write to me. Thank you, students. Thank you very much.